What if I told you that the setup you are trading might not actually be your strategy? A breakout, a pullback, a candlestick pattern. These can look like strategies, but they are not the complete picture. And confusing a setup with a strategy can completely change the way you trade. So in this video, we are going to break down the difference, and by the end, you will have a simple framework you can use for your own trading. But first, if a breakout is not a strategy, then what actually is? Ask then trader what their strategy is, and you will probably hear things like a breakout, trading, moving averages, price action, or candlestick pattern. But here's the problem. Those are usually tools, techniques, or setup, not complete strategies. A real strategy has to answer much bigger questions. What do you trade? When do you trade it? In which direction? How much do you risk? Where do you exit? And perhaps most importantly, when do you stay out? Think of a strategy as your complete trading game plan. It defines your market, your time frame, your trading directions, your conditions, your entry rules, your risk, your position size, and your exit. So a strategy does not simply say buy the breakout. It tells you which breakout deserves your money and which one should be ignored. And that distinction is extremely important because now we can define what a setup actually is. A setup is a specific opportunity that develop inside your strategy. For example, imagine a stock is already trending higher. Price start consolidating near resistance, volatility contract, structure remains bullish. Those conditions may create a potential breakout setup. But notice something. The setup tells you that something interesting is happening. It does not automatically tell you to enter. Here's probably the easiest way to remember this. Think about driving to a destination. Your strategy is the entire route. A setup is simply a turn along that route where you may need to make a decision. You would not change your entire journey just because you show an interesting turn. Trading works the same way. Setup shows you the opportunity. The strategy tell you whether that opportunity belong to you. And here's where this get even more interesting. One strategy can contain multiple setups. For example, your overall strategy could be trend following. Inside the strategy, you might trade a breakout setup, you might also trade a pullback setup or a continuation setup. Different setup, but the same overall strategy. Think of the strategy as the umbrella and the setup as the different opportunity underneath it. Let's make the practical. Imagine a stock is in stock uptrend. It approaches resistance and begins forming a tight consolidation. Volume becomes quieter, the range contract. Buyers are still defending the structure. Then price start pushing above resistance. You now have something worth watching, but do you buy immediately? Not necessarily, because we are still missing one important piece. That piece is the trigger. Think of the sequence like this: context, strategy, setup, trigger, entity, entry. Price suddenly break out, and your brain says, if I do not enter right now, I will miss the entire move. That thought is where FOMO begins. The trader forgets the strategy, forgets the risk, and start closing the setup. The entry becomes emotional instead of planned. And here's the important part. The setup was not necessarily bad. The problem was trading it outside the strategy. Now imagine two stocks showing almost exactly the same breakout pattern. Stock A is in a strong trend, has supportive volume, a clean resistance level, and attractive risk reward. Stock B is breaking out directly into major resistance. Volume is weak, and the stop loss would be extremely wide. Same pattern, completely different trade quality. This is why professional traders do not simply ask, do I have a setup? They ask, does this setup fit my strategy? Now let's turn this into a simple filter. First comes market context. Then your strategy determine what kind of opportunity you are looking for. Then comes the setup, then the trigger, then the entry, and finally trade management and exit. This means you do not have to trade every interesting chart. You only need to trade the opportunities that survive your filter. And this concept is not limited to stocks. You can apply the same thinking to swing trading, forex, crypto, or commodities. The market volatility and time frame may change, but the process can remain remarkably similar. Understand the context, apply your strategy, wait for the setup, wait for the trigger, and define your risk, then execute. The market can change. Your process should not change every time. It does. Once you understand this, something interesting happens. You stop feeling like you need to catch every move. You might see a breakout today, a pullback tomorrow, a continuation setup the day after. Different setup can create different opportunities, but you do not need all of them. You only need the one that fit your age, and that's where discipline becomes more important than prediction. There are things in trading you can control, and there are things you simply cannot. You cannot control market directions. You cannot control the news. You cannot control the volatility. And you cannot certainly control whether your next trade wins. But you can control your process. You can control your risk. You can control your execution. And you can control how you respond. That is where your real ace begins. Discipline is not just staying calm after a losing trade. Discipline is refusing to take a trade when your setup is not there. It's respecting your risk. It's not chasing a move because you feel late. It's not doubling your position because your last trade was a winner. And yes, sometimes discipline feels boring, but in trading, boring can be a very good thing because consistency is built by doing the right thing even when nothing exciting is happening. And the learning does not stop when the trade ends. That's actually when the real learning begins. Ask yourself, did I follow my plan? Was the setup actually valid? Did I enter too early? Was my risk correct? Did emotion change my decisions? And here's something important. Do not judge a trade only by whether it made money. A losing trade can be a great trade if the process was correct, and a winning trade can be a terrible trade if the process was wrong. This brings us to one of the most misunderstood words in trading: consistency. Consistency does not mean winning every trade. It means making decisions using the same high quality process again and again. Your age is not proven by one trade, it's revealed across a large sample of decisions. So stop asking, how can I predict the next trade perfectly? Start asking, how can I make the next decisions better? So let's look everything together. Number one, strategy. Your overall trading game plan. Number two, setup. The opportunity developing inside that strategy. Number three, trigger. The confirmation that tells you it's time to act. Number four, entry. Your planned executions. Number five, management. How you protect and manage the position. Number six, exit. How you close the trade according to your plan. That's the complete time frame. Strategy, setup, trigger, entry, management, and exit. So, should you trade every setup you see? No. And this is probably the biggest takeaway from this entire video. You do not trade simply because a setup appears. You trade when the setup fits your strategy. There is no perfect setup. There is no holy grail. And you do not need to be right on every trade. You need a process you understand, risk you can control, and discipline to repeat it. Strategy gives you the rules, setup gives you the opportunity. Remember this line, do not trade the setup, trade the setup that fits your strategy. So, the next time you see a beautiful breakout, a perfect pullback, or an exciting candlestick pattern, don't ask, can I trade this? Ask a better question, does this fit my strategy? That one question can completely change the way you approach the market. If this video helped you understand trading a little more clearly, hit like. And if you want more practical trading concept explained this way, subscribe to the Trading with NJ. Here we do not just chase setup, we learn the process, plan the trade, execute with discipline, and repeat. Learn, plan, execute, and repeat. I will see you in the next video. If the video helped you see trading from a different perspective, do not just take the lesson, apply it to your own trading. If you found value in this video, hit the like button. It really helps the channel. And if you want more practical trading, concept real examples and lessons that help you become a more disciplined trader, subscribe to Trading with NJ. Turn on the notification so you do not miss the next video. Learn, plan, execute, and repeat. Thanks for watching, and I will see you in the next video. Thank you.